Which, by the way, so there's two things that tells you. First of all, the stock market has been more volatile than Bitcoin. I never thought I'd say that, but that's been the case. And then number two is that this quiet periods are the periods before big moves. So you know something big is coming. Think about the eye of a storm where it's very quiet, but then when you come out of the eye of the storm, it gets real crazy. So at some point, something is going to trigger here, either a big move up or a big move down. I 100% agree. Look for that. Look for those signals. And then like you pointed out on Bitcoin, that's something that to pay attention to is that Bitcoin was not flushing when the stock market was dropping, when the dollar was soaring here. And does that mean we're going to get this short-term rip up in Bitcoin? And again, who knows how high it goes, but just little signals like that for the near-term swing trades are great to look for. Higher lows on the chart, correct? So you're looking at the June right here. But I think you have to kind of keep in mind that this is a bearish. This could be a bearish pattern. If we go to the parallel channel, right, we put a trend line below these lows here, and we drag this up, you basically are creating this. And so when I'm talking about maybe a breakout from here, you probably would head as high as this level here, which is around 25,000. But you're still in a sideways channel, which from this drop, or you could look at a bigger drop, it's still bearish as of now. It hasn't flipped to bullish yet on Bitcoin. Yep. Which, by the way, so there's two things that tells you. First of all, the stock market has been more volatile than Bitcoin. I never thought I'd say that, but that's been the case. And then number two is that this quiet periods are the periods before big moves. So you know something big is coming. Think about the eye of a storm where it's very quiet, but then when you come out of the eye of the storm, it gets real crazy. So at some point, something is going to trigger here, either a big move up or a big move down. You know, you're absolutely correct on that, especially over the last week or so in Bitcoin. I was commenting on how the stock market was really falling until today. The dollar was really shooting up, and crypto really has gone sideways. So I agree with you. That's a short-term bullish indicator. Again, I wouldn't look at that as a longer-term signal of a bottom yet, sure, but short-term, absolutely. And that kind of gives us a play where if we look at this here, and let me just erase this trend line, but you have this kind of channel. And look at where we've been hovering, right at the lows. And if you look here, we bounced. Here off of this line, we bounced. Now we've been hovering here, and it's held up. So maybe we have one more trigger to go up to about 25,000. Then the question is, can we break above that? And that's going to be the big question there. But I wouldn't, the way it's been acting, it's been very, very healthy for Bitcoin to be holding up while the stocks have been going down and while the dollar's been going. A little bit on Ethereum. I'm more of a swing trader on Ethereum at this point. But yeah, I mean, Ethereum, it's still well above these lows from June. It looks like it held this retrace. And this is just a great example of technicals where you had this, you can see pivot high, pulled back, broke out. And we know that when you break out, charts tend to want to come back to home base. Where was that breakout? Well, guess what? It was right there. It came right there and has kind of held up relatively well. Now, if we rally up, this down-sloping trend line becomes the resistance point. Now, with the merge, I mean, it's kind of been a little bit of a crazier analysis point on the merge, but right now, again, you're holding support on Ethereum, and it wouldn't shock me to see us go up and test this trend line up here. Sell the news event. And I always say this to people is that, like, emotion, like if you're in a bear market, that's the most powerful thing. Like if we were in a bull market, then it probably would have gone to all-time highs, right? Or would have, but you have to recognize what type of market you're trading through, where instead of a buy the dip market, it's a sell the rip market. So you get these gifts of these big moves and you have to be selling into them.
Definitely. Gold, silver, do you get into that at all?
Yeah. So I've been a big gold bug all year long, disappointed, honestly. In some ways, right? So a couple things to keep in mind. And by the way, gold had just an awesome move today, big move up. But number one, if you're trading in euros or yen, gold's done amazingly well this year. If you're trading in dollars, I think gold's down, 6% on the year, which, by the way, it's been one of my favorite assets for 2022, and at least it's been the best performer in an otherwise nasty market, right? Bitcoin down huge, S&P, NASDAQ down huge. If you're down 7% while everyone else is down 20 to 30 to 40%, you're doing pretty well. I still think that gold is going to be a big mover. The chart in the longer term is very bullish to me. So if you look at where this chart was going back to 2018, it had this big bullish move up. Well, it's been digesting that, right? Charts, when they have these big moves, it takes a long time to digest. And I think that you've seen that digestion going on in gold. I think you broke below this line mainly just because of the such a strong dollar move. But ultimately, I think this is a chart that will eventually break out to the upside. And I think I do think you're headed to 3,000 or greater on gold, maybe as early as 2023, 2024. I was going to say, I mean, and this is just such a cool technical point, but I'm erasing these trend lines on purpose because I want to show you guys. So the last time we had inflation like we do now was in the 70s into the 80s. And what you actually see is that the chart is almost identical, right? So let's look at this chart, right? So we had this big move up here from 2018 to 2020, and then this kind of choppy sideways down move. And if we go to the monthly chart and we go back to the 1970s on gold, and bear with me as I get back there here. So let me zoom in here. So what you can see here is that, and let me just try to get in. So look at this. Let me just try to get my arrows here. So imagine if this was the move from 2018 to 2020, and then this is the move from 20 to 22, which is what we're experiencing now. And notice how the inflation is the same, right? I mean, you're seeing this massive 8-10% inflation. Well, that was basically what we were seeing back then. But look at what gold did eventually. It had this monstrous move. Now, again, I don't think gold's going to do the equivalent of 1,000% move up, but I do think this is the next move. And this is a very common pattern, right? Big move, digestion, big move coming. And so that's kind of what I'm thinking is going to happen with gold coming up over the next few years. I think that's great analysis. And I agree 100% is that, and any time you get these dramatic moves, like you have to be a little crazy to kind of expect more and more. And this is what drove me nuts with Bitcoin is that, you had these crazy moves on Bitcoin and people were like, oh, but it's going to go to $250,000 next month. And and it's just, at certain points, it's just not realistic. And you're getting into these ridiculous realms. And you have to be very much grounded, right? As an investor, we talked about this earlier. You want to almost be a robot where when you see something that's ridiculous, react to it. At least take some off the table, but leaving it all on the table, just hoping to hit the jackpot, win the lottery, that's ludicrous in the investing world. I think right. So I think the two differences, right? You have housing, which is obviously correcting. I mean, especially here in the US, and I can't speak for how it was in Australia, but here in the US, things got ridiculous. People were paying $100,000 over asking. There were 10 bids on a property, and it was just honestly, it was exactly what you look for when it's a bubble. And so you have to know as an investor to say, you know what, I'm not going to chase. I'm not going to get caught up in the hype. Now, when it comes to land, I mean, the one thing to always remember is they're not making any more of it. So that's the positive about buying land. I don't know. I'm not well enough versed in what land values are right now to know if they've kept pace with the housing market. But I certainly think that while you may get bounces when interest rates pull back, the wealth effect from the stock market decline, the crypto market, all of that is going to impact people's ability to purchase houses. Plus, interest rates being higher are just making it so expensive that you will see the housing market continue, at least in the U.S., to correct. Yeah, no, you're right in terms of that. I mean, again, with the big money buying up, it's probably going to kind of cushion any sort of downside to some extent. But the question is, right, is that, I'm not sure if I'm well enough versed to know more than just the retail buyer of real estate, and the costs have just soared exponentially. But you're right. I mean, if the funds are buying it up, then it does probably put some sort of floor on it. Yeah, so I think, and you're right. I mean, we don't want to be all doom and gloom. We want to look at all sides. A good trader, a good investor always looks at the bad and the good side and then kind of decides which one. And that by the way, that helps you with risk management as well to understand, if you're going short, you have to know what's the opposite and vice versa on the long side. So I think for me, if we saw the Fed somehow engineer a soft landing and the global central banks kind of in Europe figure out how to get their economies to at least come back to a little bit of growth, that would be the best case. I also think you have to get inflation down. So far, we haven't seen it come down. I do expect it to start to moderate quite a bit, but I still am struggling with figuring out how it's going back below 2%. And then lastly, I think you look at scenarios like, if the war in Ukraine were to somehow end and things were to improve dramatically there, the gas supply is resupplying to Europe. You have a lot of scenarios for growth and a reemergence of the economy, at least over in that area of the world. So there are positives. It looks bleak right now, but I think the big thing is, for you and me, we follow the charts, and the charts should guide us. I mean, the beautiful thing about it is we should see in the charts that some of these positives may come out. I 100% agree. Look for that. Look for those signals. And like you pointed out on Bitcoin, that's something that to pay attention to, is that Bitcoin was not flushing when the stock market was dropping, when the dollar was soaring here. And does that mean we're going to get this short-term rip up in Bitcoin? And again, who knows how high it goes, but just little signals like that for the near-term swing trades are great to look for.